Alright, how is everybody doing today? Welcome back to the channel. In this video, we're going to be talking about 5 stocks to buy in December of 2020. Now, these are all stocks that are either buys right now, or you should definitely keep an eye on them within the next month, if not a little longer, if you guys want to purchase them yourselves. Now, these are all good opportunities in the market that I think are pretty decent, and especially if they reach a certain price points I'm going to be talking about in this video, then they're going to be definite buys. In the last month of the market, like, it has been pretty good. The first half of November, it was pretty good. Basically, the time of the election day and stuff like that, it was doing pretty decent. And in the second half of November has been pretty flat. But overall, 10% in a month for the S&P is definitely pretty good. And it's obviously reached all-time highs within the month of November, so that's been pretty crazy. But we're gonna be looking at specific stocks here. Right before we jump into it, if you haven't already, make sure to subscribe to the channel. I'm trying to hit 600 subscribers by the end of 2020, which is just a month, but we can do it. We're about like 50 subs away, so if all of you guys watching right now subscribe, we can definitely reach 600 subs by the end of the year, so that would be really appreciated. Now, there are about 5 stocks, but right before we jump into it, make sure you guys sign up for Webull if you haven't already. I'll leave a link down and below. I think for the end of the year, they're doing this thing where if you sign up, you'll get 4 free stocks instead of 2. So definitely make sure to sign up for Webull if you guys haven't signed up already. I'll have a link down below. All you guys have to do is sign up, make a brokerage, and deposit $100. That's it, and you'll get 4 free stocks, and 2 of them can be worth up to $1,600. So if you haven't already, definitely make sure to do that. So the first stock is Corsair. Now, I talked about this stock before. Right now, man, it is too high. Now, I made a video on this stock. I recorded it when it was at $27 a share. And since then, man, it has freaking skyrocketed. So I couldn't build a position big enough. But good news is it's fallen about 20% since its all-time highs. I got comments talking about when I made a dedicated video on this stock saying, should I buy at 50? Should I buy at the 40 something? I'm like, no, I literally told them do not buy at that level. Like, at that point, it's all hype. You can't buy a stock after it's gone up that high. You got to look at the valuations, man. It is at $40. It is still really expensive, but it's very likely that this stock might dip lower. If it goes anywhere in the 20s, it's for sure a buy. In my opinion, it's for sure a buy. If it reaches the low 30s, I probably will consider it. And I'm probably just gonna sell off the few shares that I did buy of this. I think I already did actually when it was at an all-time high because it was just too expensive at that point. But usually when I buy stocks, I buy a few shares at a time and then I slowly build out the position. But I just didn't have time. It literally in the span of a few days went from literally the next Monday, it went from, I don't know, it basically doubled. It went from like 20 something to 40 to 50. So that is that. But within the month of December is definitely a good buy. Basically, if you don't know what Corsair is, they basically sell all types of different computer related products. They sell like peripherals. Their main during the holidays, the main thing they sell is like keyboards, headsets, mice, stuff like that. That's like their main seller. And obviously they sell their PCs, like if people want to get pre-built PCs during like Christmas and stuff like that, that's another part of their business. And also they're big in the streaming space, so they own, like, they have basically the number one gaming streaming equipment. Now, it's not only gaming, you can use it for like if you just have a face cam and stuff like that, but they have the number one brand in online gaming in terms of streaming, right? They're like the number one player in like the Twitch space and stuff like that. They also own Scuff Gaming, but their main sellers is obviously the PC components, RAM, PC cases, stuff like that. And I made a dedicated video on this, but basically I do really think this is a really good stock to buy. Especially I feel like before, when it was at $27 a share when I made that video, it was a good buy because I feel like during the holidays this stock would completely explode because most people aren't getting like these kind of experience type of birthdays. They're probably going to get more gifts, and it's most likely going to be these type of computer or digital type stuff. But at $40, like I said, you guys should be picking it up. If it goes anywhere in the low 30s to 20s at all, then it's definitely a buy. Now the next stock is a very interesting one. In the month of December, you guys know Airbnb should be IPOing, so this is definitely a good stock to look at. Today they actually said that they're going to be valued about $35 billion at IPO, which is, I mean, that is kind of expensive. $35 billion for this company because looking into it, they only make their last year was only $5 billion in revenue, and they're losing money. So that's definitely something to consider. I didn't know they were going to be valuing them at 35 billion, which you're paying about almost 10 times earnings, maybe 8 times earnings, right? It's kind of expensive, man. That's kind of expensive for this type of stock. So we just gotta wait and see what happens at IPO day. If this stock absolutely skyrockets at IPO day, I wouldn't recommend you guys buying it at all. But it's definitely something to keep an eye on. If you're bullish on Airbnb, if you look at their company and you really think it's gonna do well, definitely make sure to look at it within the month of December. If not, purchase it, because they're meant to go IPO sometime in the first half of December. So definitely make sure to look at that. I made a whole video on Airbnb. If you haven't, make sure to check it out. It's on my channel. And yeah, that is that. The next one is Dropbox. Now, Dropbox, I've been buying a little bit. I'm not crazy. I'm not going to go like all in or like half of my stocks on Dropbox, but it's a very interesting play in my opinion. Basically, they have a crazy cheap valuation. They're in the cloud storage space, which is obviously growing crazy right now, right? The cloud space is doing absolutely insane numbers right now. So basically, Dropbox is going to be, I believe, a player in that space, and it's definitely going to be pretty good if you guys are willing to hold the stock for at least a year. If you want to hold the stock for 6 months, you're probably not going to make much. Like, I wouldn't be surprised if 6 months from now the stock's only at $22, $23, but in a year from now, 2 years, 3 years, this stock is a 2x in my opinion, at least a 2x. Basically, they own they own HelloSign, which is a competitor to DocuSign. Which, if you guys don't know, DocuSign is one of the biggest players in the signature space. Basically, if you want to go and let's say you own like property, you want to get electronic signature payments, DocuSign does all of that. DocuSign's worth about 43 billion alone, right? And Dropbox, who owns HelloSign, which is I would say it's the second biggest signature type of company. Dropbox is only 8 billion, and about 2 to 3 billion dollars of this 8 billion is in cash. Like, Dropbox literally holds that much in cash. It's actually insane. So Dropbox, in my opinion, the CEO is also a really smart guy. So if you haven't already, definitely make sure to take a look at Dropbox. It's a very interesting stock to look at. Their forward P ratio is only at 24, and they're meant to grow at least like double digits within the next year. So that is pretty good. So this stock, I think, in my opinion, the worst that can happen with Dropbox stock is that it goes down to $16 a share, back to its all-time low, 16 to 17. It might not ever go back to 17. It might go to like 18, 17, and you lose about 5% to 10%, maybe even 15% of your money. That's the worst case scenario. Best case scenario, you at least double your money, at least. So that's why I think Dropbox is a very interesting play, in my opinion. And yeah, definitely look at that. And now the next two, I told you guys 3 so far. And actually 4, sorry. I told you guys 4 stocks so far. This is going to be the 4th one, is Activision. Now, the last 2 are kind of like, I'm looking at them. It's not 100% buys. But if Activision stock reaches anywhere in the low 70s to 60s, if it touches anywhere in the 60s, I'm buying right away. But if it goes to low 70s, because that's kind of unlikely, if it reaches low 70s, and just today, I mean, just like a few days ago, it was at 75. So if it goes back to like low 70s, I'm talking 72, so stuff like that, even like 73, maybe if it touches 73, I'm definitely looking to purchase some of this. They only have a P ratio of 28, so their forward P is probably like a 24, 25 last time I checked. But this stock has been pretty flat, so it should be around there anyway. And they're a pretty good buy in my opinion. They actually are going to have an insane Q4 in my opinion, with PS5 and Xboxes coming out. And obviously their Call of Duty that's set to launch. I mean, their new Call of Duty is like their main title, right? But they actually have like the free-to-play game is meant to come out in just a week or so now. That game's gonna explode in my opinion. They're basically releasing a brand new free-to-play game every year by the looks of it. And they're kind of doing what Fortnite is doing, but in my opinion, Fortnite is more of a child game that can't monetize as well as a Call of Duty game. Because if you just think about it, if you're like 8 years old, 12 years old, you're not going to have that much money to spend on skins. I mean, you probably will, but not that much. Then a Call of Duty that's catered towards like 18-year-olds, anywhere from 12 to like 50-year-olds. Like, most like a 50-year-old isn't going to play Fortnite. But if a 50-year-old plays the free-to-play COD, like, their monetizing is pretty insane. Like they reached crazy records in microtransactions this year, and I don't see that stopping anytime soon in my opinion. They basically own all the esports games. They own Battle.net, which is the launcher. Basically, if I pull it up, they own all of the Battle.net games, which is I believe it's, first of all, they own the biggest players in the iOS space. They own World of Warcraft. Blizzard owns all of these, and they own Blizzard. So StarCraft, Diablo, Hearthstone, they own all of these games. Obviously Call of Duties, Warcraft, Overwatch, which is a big one. I believe Overwatch 2 is set to come out in a year or so. And that's a huge game by itself. And yeah, they own a ton of games. Their microtransactions are huge. They're big overseas as well. Like some of their Hearthstone games, I believe, is it StarCraft or World of Warcraft as well is huge overseas, and just in esports in general is a crazy growth space. So that's why I think long term, especially Activision will continue to expand. Not to mention they pay 0.5% dividend. So even if the stock remains fairly flat, you're still making as much money as a savings account at the end of the day. So that's why I do think Activision is pretty nice. Last but not least, this is kind of like one that's kind of like a wild card here, is Beyond Meat. I made a video talking about it last video. Make sure to check it out. I think it was last video where I talked about Beyond Meat. Now, this is a very interesting play, man. They're growing insane numbers, right? BYND is their ticker symbol, and they're basically growing double digits easily. They're growing about 50% for the next, like, I don't know how many years. So they're doing pretty damn decent right now, and I don't see the trend ending anytime soon. Now, if we pull up their chart, right? Let's go to their financials. They're basically, look at this. You don't see this kind of growth, man. You never see this kind of growth in the food space. They went from 20 million, 30 million, 80 million to 300 million. Let's look at these quarters, man. Okay. 100, they're already making 400 million. They've already grown at least 40% this year alone. If you look at their stock, in the last year, it's flat, even though they've grown 40%. I mean, it hasn't been a full year because they didn't IPO that long ago. So, actually, no, it's about a year. They did IPO a year ago. So, yeah, it's been fairly flat in a year when the company is continuously growing. This is why I don't usually like buying in IPOs. As you can see, the hype is insane during IPO days. Not to mention, they're most likely going to get a McDonald's kind of sponsorship. They're not sponsorship, but collaboration there. If they get a contract with McDonald's, it's over, man. It's GG's. Like, they're gone. If McDonald's releases a product and it has Beyond Meat in it, oh man, you already know they're doing crazy numbers. So that is why I think Beyond Meat will do pretty good. Now, this is a very long-term play. Like, I wouldn't be surprised if I hold this stock and it does fall, but I don't see Beyond Meat, the brand that Beyond Meat has, I just think it will do pretty decently for the long-term time to come. So if you're interested in that, definitely take a look at Beyond Meat. Not to mention their CEO is actually pretty crazy. Like their CEO is a smart guy. If you look at his interviews, he actually has that I would say vision that kind of like an Elon Musk would have, if you know what I mean. Like he actually wants to change the world, and secondary is growing the company. Like number one, he wants to change the world and make everyone stop eating meat and kind of help that climate. And then the secondary is making the money of Beyond Meat, stuff like that. So he does have kind of like that Elon Musk type of vibes to it. I'm definitely seeing that there. So yeah, if the stock, I mean, even today, it's a good buy. It's been pretty flat, I would say, in the last month, ever since it dropped down to from the 50s to the 20s. It's been pretty flat. It came up a bit, but it's been there. So if it goes to low 30s, man, pick some up. I wouldn't say that this is too bad of a buy. Obviously, if it dips even more, then it's going to be great. But I don't really see Beyond Meat dropping too much. The only way Beyond Meat drops a lot short term is if McDonald's comes out with their vegan product. And then McDonald's is like, oh, no, yeah, we don't have Beyond Meat in their contract. We've made our own burger. Then I think Beyond Meat is going to do pretty poorly. But even if that happens and I lose money, if you buy now and it drops and you lose money, it's still, I think, long term, this stock is going to be a pretty good buy. So definitely make sure to check that out if you're interested. But yeah, that is pretty much it. That has been about 5 stocks that are great buys within the month of December. Definitely take a look at them if you haven't already. So yeah, thanks for watching. Make sure to subscribe to this channel if you guys are watching right now. If you're not subscribed, make sure to click that sub button. I'm trying to hit 600 subscribers. You guys can help me out there. So yeah, then I'll see you on my next video.